Legends. Legends. Oh, some feedback there. Hope you're all well. Welcome to the Daily Buyer Show. It is Saturday, the 20th of December here in Australia. It is late night for the UK, and I believe it's still the 19th for the US. So welcome to the show. Disclaimer, I'm not a financial advisor. This is not financial advice. This is just my view on the markets, my approach to markets for educational purposes only. Legends, if it's the first time you're joining me, thank you for tuning in. I dig all charts as they relate to crypto to help guide you through the crypto markets based on what I'm seeing. I stick to charts and data. Okay, we leave little room for speculation. All my decision making is built on charts, data, historical patterns, so thank you for joining. We have some bouncy price action in crypto where the markets are rallying, right? Oh, well, the day just started, so we just turned over a new day, but so this is all refreshed, but we had some big rallies and some big bounces, okay? And then we're going to talk about that. Look at this. What's this? BERT bounced 16% yesterday. Bitcoin had a nice 2 or 3% move. So let's talk about that. First and foremost, I'm going to open up my Substack. Now, I do a weekly update in Substack, totally free. Just follow me on X if you want to get the link to that. We are concluding the final major macro week of the year. We were talking about for the past 2 to 3 weeks, we've been talking about this volatility window where we're coming into rate cut, we're coming into Bank of Japan, we're coming into a heavy macro calendar this week, and we've concluded. And overnight, overnight for me, yesterday, today still for you maybe, Bank of Japan hiked, okay, and the market's rallying. Right? So what does that mean? Is it a bit confusing? Maybe so. But basically, my take is the response is because the policy is less bad. Okay, so it's the market's rallying based on less tightening that's going to come. So it's not a strong loosening rally where liquidity is coming. It's more of a rally based on the fact that conditions are bad, but not as bad as feared, kind of thing. So hence, when I look at the way markets are moving at the moment, my bias is still largely unchanged. Rallies still lean towards counter trend. okay, in the short term, right? So these are shorter term counter trend rallies still, in my opinion, and I'm talking about mostly relating to crypto. The charts are still macro bearish, and this is where I just come back to the charts themselves, okay? And we'll go through a few charts around the grounds to wrap up the week, because we did have, markets closed for the week, right? Traditional markets, that is. So we'll go through a few charts. Let's just start straight on the USD JPY, because look at that. Like, that is a huge push for USD JPY. And so why is this important? Why is the USD JPY important? Well, we said, and we've been saying over the coming weeks, that the USD JPY is kind of like our barometer or health check or stress test on the carry trade, and the carry trade is what underpins a lot of global liquidity. So we were saying that with Japan hiking, ultimately we'll see in the USD JPY and the Nikkei what the market actually thinks about those conditions. Because if the market starts, or if yen starts gathering strength and starts rallying, and hence USD JPY starts tanking, that would be suggestive, or could be suggestive, of a carry trade unwind. So right now, what this is telling me is that the carry trade, based on the USD JPY and the Nikkei, the carry trade is still intact. Market participants are seemingly not too concerned about the rates or rate trajectory in the shorter term, and so hence the carry trade looks intact for now. Okay. Considering the UK cut rates, so Bank of England cut rates overnight, was it overnight? Yeah. So the Bank of England cut rates, so that's offsetting, some of this Japan hike. We also had the EU paused. Okay. So hence we're getting a bit of a mixed read, right? Because the DXY is still charging. Well, not charging, but the DXY was still also bullish. But in a way, it kind of makes sense, right? Because we had Bank of England cut, right? Bringing in some strength to the DXY. We had JPY hike, JPY, or Bank of Japan hike. But we also then had the EU pause. So we got some mixed data, but basically what that just makes me do is just come back to the charts. Things still largely seem unchanged. And the main distinction that I'm making is the fact that this rally seems to be more based on less fear, less tightening concerns, rather than faster loosening. Okay, so that distinction to me is important, because if the market expects faster loosening, we'd probably see more sustained bullish price action, probably, right? Because that's the market expecting more sustained liquidity and supportive environment, whereas a market rallying based on less tightening and less fear, so not as bad as what we thought, is how I'm thinking about it, just creates potential short-term relief, in my opinion. So that's the way that I'm looking at it, and that's the way, for me, when I look at the charts, that's the way the charts are still painting a picture, where, these rallies, I still see them as relief, okay? I still see them as shorter term. Now, we did also get a little uptick overnight in net liquidity, okay? And in a general sense, this is heading in the trajectory that would support liquidity coming to markets. But when you dig under the hood, the uptick in net liquidity was driven by this dump in the reverse repo market. And typically, that is not new liquidity expansion. That is existing liquidity redistributed, right? So that's money moved from being parked in the Fed potentially back into the system. So hence, again, it's more of a recycling of liquidity. So unless we're seeing that sustained balance sheet increase the Fed's balance sheet, that's where you're getting the new impulses of liquidity. Moves in the RRP, the reverse repo, is just more existing redistribution of liquidity. So can support, but again, is just more shorter term. When I still just zoom out and look at the bigger picture, we're not in these expansive environments where the Fed is actively and aggressively expanding their balance sheet or aggressively cutting rates to incentivize risk, right? It's still a very moderated approach to, kind of maintaining the liquidity environment. So hence, it still just doesn't all scream to me big liquidity, similar context and environment to be supportive of price discovery parabolas or new bullish macro trend. So hence, I still believe, whilst in the shorter term, we may be setting up for a counter trend rally, and maybe it's a decent one if again, this shorter term liquidity comes to fruition. I just don't see at this point in time, based on the charts, etc., that we'll go through, I don't see the recipe for a full-blown macro reversal to go into new all-time highs again. So I just wanted to lay that out. Khalil, welcome, legend, and thanks for joining. Hope you're well. So let's go through a few different charts before we then focus on crypto. So first thing I'll point out here, we got our macro, our risk dashboard, I call it, where we can anticipate some of the moves, the bigger moves coming by looking at the Bitcoin, RTY, and NVIDIA, right? Because as we know, the NDX and the SPX, they'll turn last, right? When we're coming into major tops, they'll turn last, and we look at Bitcoin, RTY, and NVIDIA as our earliest signals on potential weakness. Now, obviously, Bitcoin turned over, and it usually turns over the earliest, and we've seen it. We saw some weakness coming in on NVIDIA since, October, November as well, and we were starting to see some of those bearish divergences. The main thing I'll just note at the moment is the RTY and NVIDIA are potentially putting in some type of bounce here as well. So when we go out to the RTY, for example, right, again, the Russell, the RTY or the RUT, whatever ticker you want to use or call it, the Russell is the small caps index. Hence, when the Russell's bullish, it usually means there's a distribution of capital. There's breadth of capital being deployed across the risk spectrum. And then you just remember that Bitcoin is right out on the curve in the risk spectrum. So seeing the RTY, for example, being bullish, that is, if you want to be bullish Bitcoin, then that is a good signal. Okay, so for example, I'll just throw Bitcoin up on the screen with it. And you'll see here how they move in conjunction with each other. Like even if you just go right back to the 2021 top, look how these things top together, right? So you got the first top in Bitcoin in 2021, and then you got very similar double top in the RTY here, right? So here, see here, and then Bitcoin, and they move together. So hence it's that breadth of capital, because we know Bitcoin is a liquidity machine and trades as a risk asset out on the risk curve. So hence, what I just wanted to point out is we've had a lot of NVIDIA weakness lately, but we are getting a potential bounce here, okay? And in the short term, with NVIDIA as well as the RTY bouncing, and Bitcoin having some type of reaction, that could support the formation of a bounce coming in for Bitcoin as well. And we'll take a look at some key levels in a moment, and we'll work out, like, if you're with me yesterday in stream, we already pointed out key levels, potential long setup on Bitcoin, shorts, that sort of stuff, but we'll go through it again. But I just wanted to add that this bounce, along with now the fact that all of this big macro week is out of the way, it may set up for some type of Santa rally or rally into the end of the year. And I'll just point out to you what we should be watching. But again, RTY and NVIDIA having this bounce here could be a leading signal on some potential bounce coming in for crypto, because crypto is pretty beaten down at the moment and it is pretty due for at least some relief. Across the indices, I still will point out though that the FOMC level that we'd been tracking, where our thesis is that in the short term, when the FOMC cuts rates, what they're trying to do is stimulate some type of risk appetite, okay? Where stimulate participants in the market to take on some type of risk. So call it a risk gesture. Now, if they cut rates and the participants in markets then reject the gesture from the Fed, this is typically what we'll see, where the day that they cut rates, I like to plot on the chart, and this is like a good indicator of a potential divergence where this level, if rejected, while the Fed is trying to cut rates, so they're trying to stimulate risks, clearly tells us that the market participants are not accepting that gesture and for whatever reason are not willing to take on risk. Okay, so hence this is our short-term barometer level where we've got this painted on the charts, okay, many charts, and now we're coming back up to retest that FOMC level. So what we want to see across the indices, if in the short term they are resuming a bullish posture, because again, over the last few weeks, we were just monitoring some bearish concern coming in the way that we retested the structure lows, especially evident here in the DJI, the way that we pressed through the daily structure lows after sweeping the highs. And we said that these distribution tops can take time to play out, but this is one of those earlier signals that fire when the structure lows get penetrated, right? Historically, when price moves bullishly, it won't test those lows, or when it does, it bounces strongly. And hence, we just have that on watch, and we're still not completely out of the woods, in my opinion. But again, that's why we're watching this FOMC level, because we want to see to be bullish, right? Especially in the indices, because if we're going to be bullish on the indices, it does support some type of relief or bullish price action for Bitcoin as well. Now, again, it doesn't just straight out suggest Bitcoin's going for a new macro bullish trend, because as we said, the indices will top after Bitcoin will top, right? But if you just think of it this way, if the indices are just straight up turning over, then Bitcoin doesn't really have much hope of even a decent kind of relief rally, right? So hence, if we want to see some type of counter trend or some type of decent relief rally coming in, then we'd want to see strength coming through the indices as well. Okay, so hence, coming back to these key FOMC level, this is another one of my key short-term barometer triggers right now, where we want to see these things getting above, and you want to see it then trending above the highs. Because if we just mucking about here, if we're rejecting the FOMC level, this is the NDX, for example, and then turning back down and retesting the structure lows, bullish price action doesn't do this. That is introducing even more weakness, okay? Bullish price action, at worst, sweeps or tests the structure low once. It doesn't come back to keep revisiting it. Sorry, Khalil, I'm just taking a look at the comments now. Love your content, came across your spec trainer, find it tough to join live. Oh, no worries, legend. Yeah, appreciate you. I'm glad you like the content. Yeah, and for sure, I can imagine, especially given the times here that I'm in Australia, it's probably hard to join, but appreciate you joining this one, and I guess you can always watch it back, hey? All right, so that's kind of where we're at, right? Where if we just quickly summarize before we move into crypto, we're seeing some bullish price action. We have the main macro events cleared up, right? So we've got pretty clear, call it pretty clean ability to just track the charts from here till the end of the year, because we don't have any other major volatility drivers by way of macro events. Okay, so the charts should pretty much give us a clear view of trajectory from now till at least early Jan, right? And use these FOMC levels as the benchmark, because if we're rejecting those FOMC levels and then turning back over, it's less likely that we're going to be bullish into the end of the year, and we may need to be waiting until January. Whereas if over the course of, especially in the next week, etc., we're getting above these levels and pressing higher, and given the beauty of crypto trading over the weekend, if crypto just keeps pressing forward over the weekend with bullish price action, that could be the development of this counter trend and at least relief, but potentially counter trend. So that's what's to keep an eye on from here, legends. Keep an eye on those FOMC levels. Now, before we jump straight into Bitcoin, let's just take a quick look at our favorite chart, which is stablecoin dominance. Because as we've said, if participants are moving into stables, it means they're taking profit or they're exiting positions in crypto, right? So we've been watching this pivotal level where trending above here means crypto goes much lower into the deeper bear market. Okay, we're still stalled out up here. So if this is turning back over, let's jump in on the daily. Right, as we can see here, right, if this is turning back over, this is our play zone. This would support a counter trend rally or relief. Hence, we just got to keep checking this chart daily. When you're doing whether you trade daily, weekly, whatever it is, this should be the chart that you're checking every time you do your market routine or do your market checks, right? Which way, what is the trajectory of this chart? Because we've already got the bullish bands, weekly bands. Okay, we've already got weekly structure bullish. So technically this is bad or bearish for crypto, but it doesn't mean that we can't have these potential counter trend rallies like we saw here. This was the counter trend rally of January to March in the 2022 bear market. So if we have something similar, that'll be a pretty decent move, okay? And before it then potentially heads back up. So we always just got to be monitoring the trajectory of this chart. And right now we are still paused at this level where if it's going to continue heading down, then that's going to support bounces, relief, potentially something a little bit more by way of counter trend rally in crypto. Bitcoin. All right, so I'm actually going to jump onto this Bitcoin chart. So quick summary on the high time frame we've been discussing. Okay, the weekly structure is bearish. The weekly bands have confirmed bearish, and you know that these bands don't turn over unless the macro trend has shifted, right? So typically when we're in a bear market, if you want these bands, just remember to DM me on X. I give them to you for free. Nothing special here. They're just 1221 EMAs. Okay. Now the weekly structure is bearish. So the continuation trade is not this. Okay. That's the counter trend trade. The continuation trade is this. Okay. It's these trades, right? In this direction to be bearish. So hence, like this, right? We'd expect that, considering how aggressively we've pushed bearish, okay, that's a pretty strong bearish turnover. The next trajectory that you're expecting here is for a lower high to continue lower. That would be the continuation trade, right? Here to here. Now, what were we specifically looking at for this continuation trade? Well, I talked about the fact that, I'm just going to flick over back to the other chart now because I've already got it painted there. I talked about this major flip zone, okay? And the context for this zone is the fact that we've got weekly fair value gap here, okay? And I've pointed it out in many of my previous streams, where Bitcoin, the most recent fair value gap for Bitcoin, never gets inverted unless there's a major structure shift and a major order flow shift. So typically in bull markets, this rarely gets inverted, right? Unless the cycle is shifting. Now, when you combine that weekly shift in order flow with the bands and the structure, you get this really strong three point of confluence signal where weekly structure shift, so structure takes priority, right, is A1, okay? So weekly structure shifted, weekly order flow is shifted, and the bands, which is usually the lagging signal, the last signal, has also confirmed bearish. So hence, if you just reverse engineer that signal from a bearish perspective, what we'd be expecting is we can see that the weekly order flow starts here for the sell side now, okay? The bands are coming in. Now, usually once the bands are inverted, see how they inverted in bear markets like this? There'll be resistance until price is ready to flip the bands and flip the major trend again, okay? So hence, we've got, this is where my major flip zone starts. It starts with this weekly fair value gap, finds resistance in the bands, and then I've got the daily structure high here, where currently Bitcoin has to get above, weekly and daily structure is bearish, so Bitcoin has to get above this high, okay, in order to at least turn our daily structure into bullish structure. Okay, the current structure on the daily is like this: high, lower, low. Okay, so since this lower high, we haven't confirmed a new daily high. Now, if you're looking at this internal price action, okay, this internal daily structure is just that, internal structure. And when you see internal structure where price is contained between the primary high and low, this is what I call a complex pullback. Okay, if you want a breakdown of what a complex pullback is, how to trade it, and how to understand it, just go onto my building block series on my YouTube and look for complex pullbacks and primary versus internal structure. But what this often means is, at the very least, price is going to take some time, potentially form a range, potentially create liquidity before the next move comes. So it means you typically have to be patient, but you've got to be observing how price develops within this range, because it's typically going to take longer and potentially create a bigger range, okay? So hence, for Bitcoin to be bullish, at least on the daily structure, it needs to get above here. So that's why, coming back to my major flip zone, that's why here is the major area that I'll be looking for the macro short. Okay, so if we see it coming into here, maybe even it tries to take this level here, we get the macro short. We've also got to remember we got that 100K level, which is kind of like a notable psychological level, right? It's the talked about level for multi-cycles now. So hence, I'll be looking at reactions. If this does, what I'm specifically looking at is right now, in the way that price has developed, in that we've created liquidity throughout this range to the buy side by way of seller stops here through all this chop. So if we come down to the 1 hour, for example, these ranges, these choppy ranges create liquidity on both sides of the market. So hence, we could squeeze all this higher, and where does it lead to? Straight into our flip zone, right? At the same time, okay, if I zoom back out to the 4 hour now, on the downside, we've got untapped liquidity here, now here, okay, and here. So that, how that guides my view and approach to potentially trading this thing is, we've got our FOMC level, which I called out in my Substack is the barometer for how I'm playing in the short term, right? So shorts below this level, rejections into FOMC, shorts below at least down to here. But I said that if we get above this FOMC level, at least in the short term, I'm going to pause and reassess, okay? Because I want to see what the market's doing. Well, right now, what I'm specifically looking at is the fact that we're having a bounce here, creating this liquidity pool. without even tapping this liquidity pool, and this major low hasn't been tapped either. So if price does get above here without tapping at least this liquidity here, I'm going to be more inclined to look for shorts the moment we start taking this high, because this, you could see this is somewhat of a range, right? The internal range. Okay. And if all this is left untapped, even if we get above this FOMC level, I'll be assessing price, but any sweeps and failure here, I'll be at least looking for shorts from here, at least to tap back into these liquidity pools, because you don't know, this could end up just being a bigger range like this, come back up to sweep again and come back down, right? But because in the way that I look at markets, I just primarily look at liquidity on the charts, right? That's how I'm looking at this, just and saying to myself, well, if it's going to leave all this liquidity here, okay, it means that the market is typically a liquidity beast. It loves finding liquidity, and liquidity is like the fuel for what moves the market, right? So hence, if we're getting up here from this bounce from here, it leaves this as a liquidity pool, this is a liquidity pool, this is a liquidity pool. So if we get up into here and we're seeing exhaustion into this high here, what that's actually telling me is that what's fueling this move is just the short squeezes of this liquidity, okay? And it's not new buyers stepping in and new orders to push price higher, okay? So that tells me that if that's just the squeeze and we're losing the momentum in here, then I'll be shorting, and I'll just be looking for the range short, okay? I won't, that's not, from here is not my bigger macro downtrend short, because whilst it still can come all the way down here, I believe that if it's just a bounce from here to here and turns back over, right? Because it's not as deep into here, okay, creating even more fuel to the downside on its move up to here, right? I believe this could just be a bigger range where we come down into here, okay, and then it might want to go back, turn back over the other way. So hence, just to summarize, because I know I talked about a lot there. So first and foremost, in the, call it the short, on the short side, if this is left untapped, we don't sweep these two, and from here we move up into here and we start failing, I will just be looking for a short, but it's just a short, it's just a range play short, okay, from here to here. Now, if we reject into the FOMC level, okay, if we reject into the FOMC level and we come back down, okay, here I'm not interested in any longs, okay? The only long setup I'm interested in is down here, okay? So especially if we leave all this untapped, okay? So for example, if we're rejecting here and we don't come back to tap all this liquidity, and we come down, maybe we find some support here because we tap this liquidity pool, another, that's the low, then that's the lower high before coming down here. Then I'll be interested in potentially here or here as a long setup, because it builds higher probability for me that we could just be going back to here into the flip zone. So as it stands, is it still a higher high on the weekly? I don't see any higher highs on the weekly. Let me show you. All right. So if we go back out to weekly structure, sorry, let me just clean this up a little bit quicker, like this. All right. So I don't see, Khalil, on the weekly, right? This is how I draw the weekly structure, right? So if we just take it from here, we just look at this expansion, right? You'd say here, 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 here. This is where this high was swept, validating this as the high, okay? And then when it broke here, that's the structure shift, okay? Now, I am totally fine. I said this in the past streams, because now I've got 2 consecutive bullish weekly candles. This is going to be a valid lower high if it comes back and takes this low or pushes lower. So that will, so let's say price from here goes down to here or here, then the structure will look like this. Okay. Now, if that happens, to be bullish again on the weekly structure, all that we have to do is get above this high. Because you remember, in a bearish trend, how do you invalidate a bearish trend? Well, you got to look at the last primary high, and we've got to be trading back above that high. Okay. On my building block series, if you go to my market structure videos, I deep dive specifically how I look at market structure, because it is quite subjective market structure. In general, people look at higher lows and higher highs, but how they draw their higher lows and higher highs is very subjective to the individual. I've laid out exactly how I do it, because I'm pretty much a market structure trader, and all my little nuances, like for example, the 2 candle principle that I use, I've laid it all out in the building block series. So you can just take a look at it there. But coming back to this, on the weekly structure, that's what that would look like if we now come down to take these lows. So hence, we would only need to get back above there to be bullish. But also, because we didn't have a bigger, deeper retracement, okay, from here, if we come down and we sweep this low, or even this low resolves as a weekly sweep, I will be interested in potentially taking a counter trend. And I got to make that very clear. It'll be a counter trend because the trend isn't bullish, the weekly trend, long. And I'd just be targeting back into this flip zone. You look at what price action did here, for example. This is the weekly structure where here swept the high, so it validated this is the high, but it's a weak high, right? It's a weak high, and it's market showing intention here that something else may be happening, or there's at least weakness. And then we came down and took this low. So at this point in time, the market was bearish. But then what happened was it did the same sequence in reverse here at the lows, where you had, this is the bearish structure, created this low, came up, swept that low. Look at that clean sweep. And then when it got above here, you could be bullish again, right? So hence, this is the kind of signal I'm looking at again. And this is why this is the only real long that I'm interested in, because if we sweep this low, or even it comes down into this low and then reclaims up here, I will be interested in looking at longs. But I'll make no mistake that they will be counter trend. Okay, so I'd only be looking to trade here, potentially at best into here. That's where the bulk of the money of the trade will be made made for me. And based on my systems, I do leave trails open, but my trails will be the bulk of the money is made in that part of the move, and the trails are just, call it extra little bonus, but they're not the big money makers. And then I've got ways that I might add back into the trade, okay, but it's a whole different kettle of fish I'm not really going to explain here. But that's my take on that. So hence hence I am watching this price action closely at the moment, and those are the 2 main setups I'm watching at the moment, right? So just to quickly recap, if we come up here before taking out this liquidity, okay, then I'm more interested in shorting here again. If we take out this liquidity, but we leave this liquidity, right? If we just take that out and then we get above the FOMC level, then I won't just jump straight back into the short, okay? Because we've taken this, we've taken some liquidity. I'll just watch. Maybe it wants to come a little bit higher. I won't be longing and I won't be shorting straight away. I'll just be more paused here. But if we come down into here, sweep into here, that's where I'm interested in a long setup. Okay. Now, the last thing I wanted to point out to you guys before we wrap up the stream. Now, in the context of current price action and this current bounce, especially when it comes to altcoins, right? I just want to make sure that you guys are looking at the right things. So many of the charts, especially the altcoins, many of them are heavily beaten down. So let's not mistake the fact that charts just don't move straight down or straight up, okay? They have to move in waves, okay? So when a chart's beaten down so much, when it has just been moving straight down, as many of these charts have been, look at this, this hasn't put in a weekly high since up here, which is 50% away, okay? So hence, when it's been beaten down like this, it's expected to have bounces and relief rallies, okay? So first and foremost, let's not get trapped there. Let's not get trapped thinking, oh, these things are bounced. Fartcoin jumped 16% yesterday. Bull market's back on. No, because when you actually look at Fartcoin, wherever it is, here, look at how beaten down it is, right? So this is the bounce. And even this daily structure turned over bearish again. And this is the bounce, okay? So hence, first and foremost, yeah, a lot of these charts are just due for relief because they've been straight down for a long time. But how are you going to know how long this bounce lasts, if it lasts, and if it turns into a counter trend rally? How do you play with altcoins? Well, you can't just be looking at the altcoin chart. You need to be tracking Bitcoin, because when Bitcoin rolls over, the altcoins will roll over. So I just laid out my scenarios. So you should be thinking to yourself, when Bitcoin's into these, if it comes back, if we have a counter trend rally and we're into these areas, these are not the times to be opening fresh longs on altcoins. These would be the times to be potentially managing your risk, taking profits, hedging, whatever you choose to do. But this is the time to potentially be planning to exit the market just in case that continuation comes in, because when Bitcoin does roll back over, the alts will get hit 100 times harder. So first and foremost, you need to be looking at Bitcoin, and then you need to also be looking at stablecoin dominance, the trajectory. Because again, if stablecoin dominance is down here, right? Or if I come to the weekly, for example, it's coming into the weekly bands and bouncing. You don't position when stablecoin dominance is down, you position when it's up, because this is the more likely time that participants are going to move out of the coins, right? So with stablecoin dominance, you don't position into support, you position into resistance, right? So those are the two charts you need to be watching. You need to be watching Bitcoin, because when Bitcoin's into its resistances, for example, up here into the flip zones, into these levels, those are the times to be considering what your altcoins are doing if you're playing with them, and to potentially be exiting, not opening new positions, okay? And then the other main thing that I suggest that you track if you're trading these things is weekly structure. Because on the daily, if you're stuck in the weeds on the lower time frames, you're potentially going, for example, let's just look at Fartcoin, or, I mean, they all look so bad. That's the thing right now, hey? Like, so many of these charts just look horrible. But anyway, if you're stuck in the weeds down here, even Fartcoin looks horrible on the 4 hour. My point is, if you're too low on the time frames, this looks like a bullish trend, right? This looks like, oh, the thing's bullish, right? You need to be looking at the weekly, because for many of these charts, they haven't developed their next weekly lower high, right? So if you look at this one, I'll just pick a random chart. What's one that's semi-popular so we can... Link, for example. If you look at Link, okay, since this downtrend, there's no weekly high yet. Again, the way that I look at structure is I need to see at least 2 consecutive candles in the opposing direction to validate a structure point. Since it's moved down, it's only had 1 week of bullish price action on its way down, never consecutively. So this is potentially its first weekly high if it turns weekly lower high if it turns over. So hence, if you go and look at these charts, don't get trapped into thinking, oh yeah, cool, I'm in the 4 hour, I'm in the 1 hour, and this thing's just bullish, it's going up. Map your weekly levels and your weekly POIs. So for example, if this has been straight down and you were a range trader, right, and let's just call this, like, let's ignore this scam wick for the moment. If you're a range trader and you're saying, cool, this hasn't set in its next weekly high, well, you might just be looking at the mid-range here. So if you're thinking to trade this thing, you go, all right, cool, here's the parameters for my trade. Like, so just, that's all I'm encouraging, is just watch the weekly structures for a lot of these to guide trajectory. So if you just flick through charts, see how none of them they've all been beaten down from a weekly perspective. On the daily, some of them might have had some more structure, right? But that's where you don't want to get trapped into going, oh, cool, the daily's reversed, we're now going into a massive expansion. Well, the lower time frames reverse to create a higher time frame structure point. So the weekly hasn't created a structure point. So the daily, if the weekly wants to create a nice big retracement, the daily is going to turn bullish to create this weekly retracement. So I'm just encouraging people to look at the weekly charts so that you can ensure that you're aligned with the higher time frame in any of these potential rallies. Okay, we'll do one more. See, XLM, same thing. The last weekly structure point was here. Since here it's been straight down. So if you look at from here to here, this is your play zone. At best, if it's going to attempt to reverse structure, it needs to come all the way up here. Okay, before you can be bullish on the higher time frame. That's 100% move. If you're a range trader, you're looking at the mid of this. So you're going, okay, if it's going to put in another weekly structure high, and you're a counter trend trader, the counter trend trade is from here to here potentially, right? And then if you want to go pro trend, you're looking for those short signals to trade this pro trend back for continuation. Legends, that's all I've got for you today. I hope you got something out of this session. As always, I'm here daily at the Bitcoin close. Please give us a like, a subscribe. That'll really help the channel and help me keep doing these videos. And if you're not following me on X already, please follow me there. It's TravB Crypto. Aside from that, I appreciate you joining. I hope you have an awesome weekend. Stay safe. And I'll catch you guys on the next one. Thanks, legends.